Hello traders and welcome to another video review. Today is Wednesday, 2nd of December 2020, and we are going to take a look on the Forex calendar, and then of course we'll make some technical analysis. So let's just go to the calendar. As you can see, you can find it here under the Forex analysis section, and let's just swipe lower to today's date, Wednesday the 2nd. So here you go, Monday, and this is Wednesday. As you remember, yesterday we got an interest rate decision from the Reserve Bank of Australia. So we got, of course, some Governor Philip speech. It was late in the night, 1 o'clock a.m. So that's during the Tokyo session. We of course have some data as well, the further data from Australia as well. This is the gross domestic product, GDP, for the third quarter, and as you can see, it was better than expected. 3.3%, better than expected. The expectations were 2.5%, and better than the previous reading of minus 7%. So very good data from Australia. Let's see on Australian dollar how this data impacted the charts. We got some data from the German retail sales, but they are not that much important. But as you can see, they are jumping a little bit higher, 2.6% versus the expected 1.3%, and better than the month of the October reading of minus 1.9%. So very nice data from the Germany. Producer price index at noon from the Eurozone, and unemployment rate on the Eurozone at noon as well. So this data might tell us a little bit more about the inflationary pressures on the Eurozone. As you can see, there is not much expectation regarding this data, 0.2% versus the 0.3% last month. So this is not a big pressure here. And then of course we got some data from the US during the New York session. First, ADP non-farm employment change, 3:15. Please remember, this data is kind of important because in Friday there is a first Friday of the month. The month is December, and we will get the payrolls on Friday. So first, ADP, 3:15. From the United States. As you can see, the market expects a nice increase from 365,000 to 433,000. So that's nice. We got, of course, some speeches from the Randall course, John Williams, and of course the chairman Jerome Powell and Patrick Harker as well. And then again, John Williams. So plenty of speeches today from the FOMC members. For those of you who trade oil, 5:30, there is a crude oil inventory data release. There's a big decline in the inventories here, so that might be interesting. Maybe we should take a look at crude oil today. Yeah, let's take a look at the crude oil today, and that will be it. So I think we should take a look at the oil, Australian dollar, because it's connected, and maybe we should take a look at gold as well, because we didn't see that chart lately. So Australian dollar first. Let's take a look what is going on there. It's a daily. Okay, that's fine. Where are my marks? Marks are here. Let's just zoom in and see what is going on. Well, as you can see, there isn't much here, because the market is not reacting very dynamically on the speeches and on the data that it's already priced in, right? So right now we are building pressure to break above 7,415, right? So this is what we do on the Australian dollar right now. There's a nice momentum. Momentum is above 60. Right now it's like 65, 63. Okay, that's good. So if we close above the 7,415 pips, then of course we have a new swing high, and this is very good for the bulls. So we can continue higher towards 7,483. So the Australian dollar, not much impact on the speeches from the governor, not much impact after the data was released, but we are going slowly but surely we are going higher. So that was the Australian dollar. Very simple analysis, nothing much to say here. Crude oil and gold. So crude oil, I think I'm analyzing this one. Yes, there you go. This is for the current month. The chart is for the current month. As you can see, technical resistance 43.85 violated. Very nice breakout. We are going higher towards the level of 46.25. That's the high of this level. So let me just not this. Let me just move my blue lines here. So that's the high 46.25. Since then we got some kind of a pullback. This is very simple to see. There you go. We are under the trend line. This is the pullback, and the pullback, as you can see, is still below the trend line but above the level of 43.85, which is right now the technical support for the prices. So we can change this color to green because it's now support, and we can do this with that one as well. So the support is 43.85, 43.07. Right now we are building pressure to break through this short-term trend line, hit the 46.25 again, and go higher towards the next level. The next level is the obvious one, is $50, but let's just take a look on what is the next, eventually the next technical resistance. Well, there is a big one. There is a big technical resistance here. Let me just mark it for you guys. There you go. It's somewhere around here. So let's just make it a little bit thicker, these lines. There you go. This is one, and the second is somewhere around, let's say, here. So that zone is, as you can see, a very big technical resistance for the price. It's between 49.29, 49.29, 50.64. So around the level of 50, roughly, right? So the level of 50 is a big resistance for the crude oil prices, and as you can see, we might get there. We might get there surely, but it will be hard for the bulls to break higher above this level. So please keep an eye on this zone. And now the gold, spot gold. What do we have here? Let's just zoom in. As I said many times before, if the level of 38% of the Fibonacci retracement of the whole wave up is violated, then the level of 50% will be hit. And as you can see, 1762 has been hit. Well, there was like a $2, not even $2 miss between the low of this candle and the level of 50%, but we can assume that it was hit because there is a big bullish engulfing pattern here. So this pattern is kind of calling for a bounce higher, of course. So right now we just be using this setup, this corrective setup as our reference setup. So right now, bounce from the 50% of the Fibonacci retracement. Where are we heading? 58 is not longer needed because it's tested, so we can remove that from our chart. Of course, right now the next levels, the target levels for the bounce are 1848, 1864. Those two levels are, of course, technical resistance levels. So right now there will be green because the price violated this level. So let's just keep it color coded to red. So if we hit these two levels, or the zone between these two levels, we should expect some kind of a market reaction, and the market reaction might be severe because we are still going lower and lower. So please pay attention to the market reaction on these two levels, 1848, 1865. This is the levels and the zone between it. So that's the outlook for the gold. For now, we are bouncing a little bit higher towards the supply zone, of course. And as you can see here, we got another line because the golden line helped bulls to bounce, but we got another line here. I think it will be much more, there you go, it will be much more slopey. Let's say it will be, let's say blue. This is the blue line. As you can see, this is the short-term trend line. The price is still below this this trend line, of course. But if today, for example, we will break higher above this blue line, then of course we are targeting 1,848, 1,865. So please notice this is the actual level for you guys, and as you can see, we are right now just below the 1,870. So very interesting levels right now on this chart. Please pay attention how the market will react on this local technical resistance, short-term trend line, and of course whether the price will break higher or just reverse and then try to break again higher towards the supply zone. So that's my point of view on the gold for now. And I think that's enough for today analysis. So thank you very much for watching this one, and I hope I see you guys tomorrow with a fresh new technical analysis made just for you. Thank you very much, and bye bye.